Master your money, free your future. Welcome to Budget for Life. My name's Jeremy. I'm not a professional YouTuber. I'm a financial advisor, but this video is not financial advice. In this video, I want to cover a Wall Street Journal article that was just released within the past 24 hours on Ryan Cohen's intentions to make a major acquisition for GameStop. And there's a couple key takeaways that I want to present to you, reading in between the lines, that you might not have thought of when you were reading the article yourself. Excited to hear your thoughts on it as well in the chat. As always, thank you for being here, of course. Thank you for the comments and the subscribers and all of that, the likes, of course. But let's get into it. I'm going to cover this article. I will not be seeing every single chat, but I will see some of them, especially if you drop a super. I will definitely see it. What's up, DMT? I don't know how you pronounce your name. I'll call you DMT. Welcome. At first, honestly, I thought this article was fake. And I will say that the timing of the article is a little bit interesting if you're talking about following the stock and this being the 5-year anniversary date or the 5-year close week of the sneeze from 2021. And max pain for today being $21 per share. On pace currently to close well above max pain. Is there a gamma ramp risk? Is there some renewed volatility upside into GameStop? And is this article released at 10 p.m. at night Eastern? Is the timing of that somehow almost like a placebo pill or a scapegoat to perhaps distract people from the greater current situation, which is that there's a lot of short interest and there's a lot of potentially technical upside to the stock. And let's give a plausible deniability for why the stock is running, which is, look, an acquisition's coming. That said, despite the, sus timing of the article release and potentially, bad intentions or, distracting motives, I do think Cohen offers some quotes in this article that I think we can learn a lot from. What's up, Martian? Great to see you. So let's go ahead and go through it together, and I'll tell you what my key highlights are. But the GameStop CEO has an audacious plan to clinch his $35 billion payday. Billionaire Ryan Cohen says he's eyeing a major acquisition, and Michael Burry is cheering him on, which we covered, by the way. So on that note, thank you to those who joined the channel as fans and friends. I do appreciate it. GameStop shares have dropped around 80% since the retailer's reign as king of meme stocks in 2021. Its chairman and chief executive has an ambitious plan to turn that slide around and has Michael Burry of The Big Short fame cheering him on. GameStop CEO Ryan Cohen told the Wall Street Journal in an interview that he is aiming to turn the $11 billion company into a $100 billion plus juggernaut. So this is kind of funny that they say as if this is like secret news. Like Ryan Cohen told Wall Street Journal in an interview. It's like, yeah, they published his pay package and it's conditional on them reaching $100 billion market cap. So that's not exactly like a secret inside information that Cohen thinks he can generate that much market appreciation on the stock. But let's keep going because there are some insights. This larger company would do much more than just sell video games and collectibles. To do this, he's eyeing a major acquisition of a publicly traded company, likely in the consumer or retail industry where he has spent most of his career. He has his sights set on a handful of companies that he declined to identify and plans to approach those potential targets soon. Okay, so this is Wall Street Journal's writing. This is not in quotes from Cohen, so we have to take this statement with a grain of salt. But how does this compare to what I've speculated on, and what does this tell us about Cohen's intentions? Well, we were correct in thinking it's quite possibly publicly traded companies that he finds fundamentally undervalued that he would be most interested in legging into. That's what I read in between the lines from his interview that he did in October. However, likely in the consumer or retail industry, I thought physical retail he might be kind of tired of, given how long the turnaround process has taken for GameStop. But that obviously consumer consumer-minded business is where Cohen's expertise is, from Chewy to GameStop. I just thought surely he's most interested in the e-commerce side of retail rather than expanding his footprint of physical retail. So I have said that in the past, at least in the comment section. It's looking to me like actually it could very well be physical retail or, of course, e-commerce. We know that GameStop in particular has a desire to be omni-channel, right? So even if it were physical, he would be focusing on improving their e-commerce. If it was mainly an e-commerce platform, he would probably be focusing on some physical distribution points. But if he's going for a publicly traded company, and he's been on the record about his caution with the macro, right? The big picture economy. He's very cautious on. His investment philosophy is cautious. He is a deep value investor at the end of the day. And so, where is deep value in the consumer or retail space? The deep value is in physical, like commercial retail, brick and mortar retail is where the deepest value is as far as a PE basis. And maybe towards the end of this live stream, which this article isn't super long, so this live stream won't be super long either, but we can kind of speculate on what are some names that fit into that category. But we know that, well, let me just keep reading because this article does talk about it a little bit. But probably consumer or retail focused, probably a publicly traded company. We will speculate on what could some of those targets be a little bit later in this stream. But I think that is a huge takeaway compared to, say, a Berkshire Hathaway. Traditionally, like the expansion into the holdings company is very associated with a diversification of sector, right? A spreading out of what types of businesses are you investing in? What are your different types of macro risks and rewards? Based on this statement from Wall Street Journal, which again, take it with a grain of salt, Cohen didn't quote this, but maybe they are fairly representing his conversation with them. It sounds like Cohen's more interested in doubling down on his retail expertise and creating a retail holdings company. Not that he would never invest in other types of sectors as well, but I think Cohen's perceived genius, like what he thinks he's the best at, what he knows the most of, is how to delight customers, how to create the type of end user experience at a price point that's profitable for the company, creates sticky customer loyalty, and ultimately leaves the customer feeling like they got the better end of the deal. Aligning employees with that, aligning technology with that, leadership with that, etc. I'm sure he's interested in the retail industry across different sectors. I don't think he's only interested in video games and collectibles, but what other types of stores or brands might he be interested in purchasing, right? This conglomerate could end up more like one of the food conglomerates, right? The companies that own tons of different brands, right? Like a Kellogg's. You know, if you own Kellogg's, oh, it's just food. It's like, well, it is just food. Fruit Loops, it's Rice Krispies, Pringles, RX Bar, Pop, Cheez-Its, Frosted Flakes, right? Is this the idea, right? Or what's like Procter and Gamble's? Geez, just show me some pictures. Oh my gosh. What a conglomerate, right? You can't even see that. Show me a picture we can see. It's one company, but they own Gillette and Love's and Swiffer and Tide and Bounty and Pampers and Crest. Like a lot of these businesses are different businesses. Old Spice, Mr. Clean, Febreze, but it's one holding company. But there's crossover synergy in. Oh, I'm not even sharing my screen. Let me hold on. Let me X this out, share the window so you can actually see what I'm talking about. Geez, sorry guys. You see that now? Okay, great. At least you heard my description of it. But Procter and Gamble, right? Lots of brands with one holding company. It's still a holding company, but it's not a holding company super akin to Berkshire Hathaway, which is, hey, we're going to have a ton of, Apple stock, but then we're going to privately hold these railroads. And then over here, we're going to do car insurance, like very separately run businesses. And Buffett is a hands-off manager, right? He doesn't take over the leadership of the companies. He just takes over the ownership, right? And lets the companies continue to operate independently, sees candies, right? Different things that have nothing to do with each other compared to a traditional holding company like a Procter and Gamble, right? Or like a Kellogg's that we just talked about that said, hey, we're all under one company, but there are synergies related to our different holdings. Those companies operate separately, but there is some type of collaboration at the high leadership level and some learnings across different companies that can benefit the other companies, right? So speculatively, I think that's more similar to what Cohen's interested in, and I'll get into deeper implications of that here in a minute as well. On this second point, sights set on a handful of companies, declined to identify them in the interview, of course, but he plans to approach potential targets soon. Why is this interesting to me? Because when Ryan Cohen made his purchases of the stock a week ago, right, when he filed his two different 13Ds or whatever, a lot of people said, oh, great, there's no way that there's a merger happening, right? They're not in talks, whatever. I said in a comment, there's nothing stopping him from buying a publicly traded company outright today. All that matters is they weren't in negotiation to do it at a meaningful level, at a material level at the time of his purchase. But if he's going after publicly traded companies, the timeline by which he could implement that purchase is not far in the future at all. And so I thought this was a great confirmation of that inclination that I had surmised, which is, hey, could it take a while for these approaches to materialize? Of course, but nothing's stopping him from buying shares on the open market, right? So if he approaches a company like he did back in the day with the Bed Bath & Beyond, for example, and he says, hey, I'm interested in owning and correcting your company. If he does that under the table, right, he talks to them, he approaches the target and they say, no, thanks, we don't want to be a part of it, whatever. Well, he can just start buying up the shares. Like he could still do a hostile takeover. If the company doesn't want the golden parachute of an agreed upon acquisition, GameStop still has the war chest to do an active acquisition, right? Right. So very interesting. Let's keep going. I'll share a few more insights. Any deal will be big, the 40-year-old billionaire said. This is funny because the only thing that's in quotes is big. Okay, so again, we don't have the full context of some of these quotes. And as someone who was covered a few months ago by The Guardian, myself, certainly context matters. And some of the quotes that I was quoted in were not in context of how I shared them. So we don't know, is he saying exactly what this article is saying that he's saying? We don't know. But this quote I honestly thought was made up the first time I read it, where he said it's ultimately either going to be genius or totally, totally foolish. I thought there's no way he would say that based on how cautious of an investor he is, right? Based on how he looks for deep fundamental value. Why would he say this? And I think there is one very plausible explanation that aligns with what we just talked about from a retail conglomerate perspective. And basically, what has the potential of being perceived as totally, totally foolish? To bet against a sector-wide downtrend, right? Like even Michael Burry in his coverage of GameStop, he talked about how basically he views all brick and mortar retailers as dying companies, right? They're going to go down eventually. For Cohen to buy brick and mortar retail would be viewed as foolish if it didn't work out. Like everyone would say the writing's on the wall. Hey, there's a reason why they're valued as cheap as they are. Just like his purchase of GameStop, just like when he bought into Nordstrom, just like when he bought into Bed Bath & Beyond, right? These are the types of companies that Cohen has an interest in, and the potential for it to look foolish is very obvious because everyone feels that the e-commerce inevitability will destroy brick and mortar retail value. Cohen views it as an opportunity to leverage key brands that have a high touch with their customer and a type of customer that has a unique ability to be specifically catered to, like the specialty retail of the video game industry or the specialty retail of the pet industry, right? Cohen feels that he has an ability to create value here. It has the potential to look totally foolish. It also has the potential to look genius on the upside because of Cohen's expertise. It also has the potential to look foolish on the upside. And this article, there's another hint of this later. But for Ryan Cohen to say, hey, I hear all this talk about a meme basket, right? A basket of stocks, a group of shorted companies, right? GameStop started. How did GameStop go from an enterprise value of negative something? What was it back in the day? Enterprise value of negative $400 million, right? How did GameStop go from that to now over $10 billion in market cap? The reason they did this is because of how heavily shorted they were. Obviously, Cohen has iterated and improved over time, but GameStop hasn't gotten to where it is right now because of how the retailer is being valued. They got to where they are right now because of how much cash they have in the bank. And the reason they have so much cash in the bank is because of how much short interest there was on the other side of the trade. So how foolish would it be, right, for GameStop to say, you know what? Say if we could go back in time to the Bed Bath & Beyond, if they were on the brink of bankruptcy like they were 4 years ago or whatever it was, but let's say GameStop is where they are now, right? They have $9 billion in cash and Bitcoin, and let's say for $500 million, they could buy out the publicly traded BBBY ticker, knowing that there's a huge short interest still out there for that ticker. Well, what happens? The shorts of that ticker have to close, right? So there, all of a sudden, there becomes a magnified squeeze potential in the GME ticker, which becomes the conglomerate ticker that holds the growing basket of retail-oriented, highly shorted stocks, right? This is a sector short. This is a short of the entire brick and mortar industry that's been doubled down on for almost 10 years now, right? So how foolish would it be to say, I don't know, I think that company's probably worth at least 500 mil, knowing that hypothetically there's another 10 billion worth of underwater derivatives that basically go underwater in the moment of that company being acquired. Why? Because GameStop has the cash and the cash flow to more than cover the deficit of whatever it is that they buy. So let's say, again, in present day, if they were to buy the past version of the Bed Bath & Beyond example, because we know that Cohen was interested in that. Well, we just saw from Burry's article that net of CapEx, GameStop has over $600 million of free cash flow from GameStop, the retailer. It doesn't even count power packs, right? Even on a net income basis. Okay, we're looking at $400 million of trailing 12-month net income. Well, if you take a company that's bleeding money at $200 million a year, well, guess what? All of a sudden, once GameStop buys them, that company is profitable because the conglomerate is now making a positive $200 million a year. And what does GameStop do? GameStop, the legacy retailer, continues to grow what it's doing. And as it's growing what it's doing, it funds the 4-year transformation of whatever it just bought, right? Under the umbrella of GameStop, the cash cow, Bed Bath & Beyond, the new acquisition, instead of having to go through these years of negative 400 million, negative 300 million, barely break even. Instead of doing that, the conglomerate can be profitable from day one. And these negative numbers that are a ship being righted can happen under the umbrella of a profitable company. It's one of the original long thesis plays of those who bought into GameStop 5 years ago, of which I was one of them, is what if, Ryan Cohen buys all stocks? Like what if he purchases these other shorted companies and rolls them and creates a merger and acquisition, maybe a new holding company ticker, right? That structurally forces shorts to close, or if shorts somehow can roll into shorting that conglomerate ticker, well, then that short interest is going to start showing, right? There's how many ways that they can hide short interest. But if you start pairing super highly shorted companies together and together and together, and they want to roll all that short interest into the new holding company, well, that's going to create an explosive upside, technical upside, just like GameStop has capitalized on in the past 5 years, right? They've taken that technical upside and traded it for $10 billion in cash, right? Now they don't have all that 10 billion because they needed to spend some of it in the first couple of years, but they've literally raised $10 billion. So and that grows at an order of magnitude if GameStop basically rinses and repeats the play that they've just accomplished. And I think, again, the fact that he's interested in doing this again means that he does feel like at this point he has learned, mastered, at least has a high proficiency in brick and mortar retail. That's a huge tell for me because in his October interview, he kind of bemoaned how brick and mortar retail is very different from e-commerce and how he made a lot of mistakes, right? He knew the e-commerce business, but turns out he didn't really know the brick and mortar business. I took that as he might not really want to do this again, right? Worked out for GameStop, thankfully, but mainly he's just trying to transition GameStop to an e-commerce company because he does not love the brick and mortar business. I think this interview and article gives us some clarity that no, that is how he felt, that is what he experienced, but now he is on the other side of it and he is able to leverage that expertise, right? Very exciting. Ultimately, it's going to look genius or totally foolish if it is this retail conglomerate like I've just described. Let's keep going. Cohen co-founded Chewy in 2011, sold it for $3 billion in 2018. Then he pivoted to activist investing for a time, agitating for change at companies including Nordstrom and Bed Bath & Beyond, where he faced allegations that he denied of misleading investors. Again, this is key. That was really Ryan Cohen that bought those companies, right? So in terms of what's he interested in buying, right? Where does he see value? He literally, the activist presence of Cohen has been involved in Chewy, GameStop, Nordstrom, Bed Bath & Beyond. I think he might be touching a little bit on the activist side with Alibaba as well, which again, consumer-focused retailer. He said a few years ago he was modeling his strategy after those of Warren Buffett and Carl Icahn, finding undervalued stocks like the former and pressing for change like the latter. Undervalued stocks. Now, this article says that Cohen said that a few years ago. So is he promising that today it's going to be an undervalued stock that he purchases? I don't think he's promised that, but I do think he's still cautious related to his investment strategy. Like he talked about in his interview in October that there has to be a very high floor and meaningful upside. Like he's not interested in putting GameStop at risk, in putting GameStop's fundamentals at risk. And think about it. If he is going to approach his potential targets, right? If it's a highly valued company with a high multiple that people believe in, why would they be interested in selling to GameStop? What's in it for them, right? But if it's a struggling company that's been on a downtrend for years, that's not even maybe even making money anymore, that seems like doom is imminent, then if Papa Daddy Cohen shows up to your boardroom and is like, here's the golden parachute, you guys all get paid, I'll take your company, and we are all better off for it, those are the ears that would perk up, right? The undervalued company, and probably severely undervalued company. Earlier this month, they adjusted Cohen's compensation package. Okay, they didn't adjust it. He never had one before. Okay, Wall Street Journal. To give him extra incentive to boost the company's market value. Again, this is his only incentive. He has had no other incentives from GameStop. I'm being ticky-tacky, but they're being a little bit dishonest. And profitability, he stands to make as much as $35 billion in stock if certain criteria are met. Part of the award starts vesting if GameStop's market value reaches $20 billion and a measure of earnings before EBITDA, or I guess EBITDA, right? Earnings before all the other things, reaches $2 billion. To get the full award, GameStop's market value must reach $100 billion and EBITDA $10 billion. More executives have been following the lead of Elon Musk, right? In November, they approved as much as a $1 trillion pay package, which is incredible to think about. This structure ensures that Mr. Cohen's incentives are directly aligned with creating long-term value for GameStop stockholders, GameStop said in a filing detailing the changes. Meanwhile, Cohen has been buying up more GameStop shares, including as recently as this month. He now has a stake of over 9% and remains the biggest individual shareholder in the business. The recent changes caught the attention of Michael Burry, the doctor turned hedge fund manager, whose bets against subprime mortgages were chronicled in the Michael Lewis book. Burry closed his fund last year to launch a paid Substack newsletter, and he wrote that they should run the Berkshire Hathaway playbook, use its giant cash to make transformative acquisitions. Cohen has a crappy business. Again, the quotes that they're deciding to use, I feel like they are giving backhanded compliments to GameStop in this article, but whatever. And he's milking it the best he can while taking advantage of the meme stock phenomenon to raise cash and wait for an opportunity to make a big buy of a real growing cash cow business. Burry, and I share my thoughts on Burry's thoughts again in this video. I think Burry is annoyingly bearish on the business turnaround that GameStop has already done. That's why I think Burry wants GameStop to buy that healthcare business, because I don't think Burry believes in the retail industry. I think Burry is internally like short brick and mortar retail. He considers the cash cow business that is GameStop to not be a real one. Like, he thinks it's kind of fugazi. He thinks that it's imminent, that it's not imminent that it will discontinue, but he thinks eventually it will struggle to remain a cash cow business, whether that's collectibles fading off, whether that's the console cycle fading off, etc. Burry, a GameStop shareholder, said in the newsletter he bought more stock recently and sees upside in the company should Cohen spend $10 billion or more. Did he? I don't know if that's if I'd have to look at the article. But does Cohen have to spend $10 billion? No, he doesn't have to spend $10 billion. Right? Like, a lot of these publicly traded companies on the brink of bankruptcy are worth less than $1 billion to acquire a quality business. So this to me feels like, again, one of those subtle ways to create a little bit of FUD. Oh no, is GameStop going to spend all of its money? Well, then they won't have any money left. Right? Like, oh man, this article is making it sound good, but I don't know if that's okay, right? I don't think Cohen's going to spend $10 billion when he has $9.5 billion. Such as an insurer. I don't think insurance is necessarily where Cohen wants to go. GameStop's substantial NOLs allow it to offset future taxable income, which also makes it an ideal acquirer for many targets. Cohen told the Journal that he hasn't spoken to Burry since at least 2019. He's one of the few investors I respect, he said. He has a track record of making prescient. Is that the word? People in the chat, is it prescient? Early calls? Precisient. I don't know. Anyways, Burry's, it's probably not precisient. I was kind of joking on that one. Burry's other writings have warned of a potential prescient. Is it true? Is it true, Punky? Anyways, Cohen gained a cult following after he built a big GameStop stake in late 2020, criticizing the company for moving too slowly toward e-commerce. Joined the board in 2021. A market value of a little over $1 billion. As I showed you guys, that was a like, when you net out their cash, they had a market cap of negative 386, negative 400 when you net out the cash. So that's why that number is different from the number that I presented. Okay, it is prescient. Thanks, guys. I'm learning over here. He rose to become chairman As we know, the stock took off. Well, really, it took off before. I mean, yeah, I guess as the chairman. Yeah, that's fine. So-called meme stock investors poured into GameStop in droves, fueled a rally. Again, we know that retail did not really fuel the squeeze. It was shorts that caused the stock to squeeze because they had bets against the business. Bad bets. GameStop reached a high of 120 per share 5 years ago. They closed at 22 yesterday. Cohen bristles at the term meme stock. This is the other key indicator that I wanted to highlight. I'll finish this article and then I'll come back to it. Telling the Journal, it's a label people use when they don't want to do the work on a stock. You either create value over time or you don't. Cohen said GameStop is finally in a good position to make bolder moves after recent efforts to sell more collectibles and shut underperforming stores. GameStop has around $9 billion in cash and liquid securities on its balance sheet that could help fund a deal. There are a lot of diamonds in the rough that have sleepy management teams. Cohen said about the retail industry, I didn't fix GameStop to start there. This, to me, crystallizes what we were speculating on a few paragraphs ago, which is his focus is on the retail industry. His learnings in GameStop are not something that he ultimately begrudges. Maybe it took longer than he wanted. Maybe it was more painful than he wanted. But he does feel that he has solved the brick and mortar dilemma. Diamonds in the rough, right? Deep value is what he's looking for, particularly with sleepy management teams, right? Which means it's another way of saying in the rough, right? Leadership has not done a lot to try to fix the situation, right? It's been in a downtrend and they don't have a leadership that's trying to revert the trend in any meaningful way. And what is he bristling at? The term meme stock. You either create value over time or you don't. To me, again, what does that crystallize? He's going to end up buying companies in the meme basket. He doesn't like that it's called that. He doesn't want, right, to be somehow devalued as a CEO or as a holding company because of how he has gone about generating his value and the company's value. He wants to be measured by the fact that he will be able to create value. And ultimately, for it to work long term, it's not just a squeeze play, right? He's going to have to fix the businesses. Any business that he buys is going to drag on the conglomerate's earnings in the short run. And he will have to put his expertise to work to right the ship of whatever he purchases. But to me, it seems so clear that he's going to go after basically companies that he can buy almost for free from an enterprise value perspective with strong brands and horrible problems as it relates to management, maybe conflicts of interest, and probably extreme levels of short interest. What does that mean? He's still very interested in coming after Wall Street. He's still very interested in the original GameStop play, the 5 years ago GameStop play, the short squeeze play, right? It hasn't like the squeeze hasn't happened yet. And maybe the squeeze never happens from a MOAS perspective. But this was not a cute experiment for Cohen. This was a sign of what's to come. And I think reading between the lines, that's what I can take away from this article. In a minute, we can speculate on a few potential acquisition targets. I'll probably save that for a future video to like really dive deep into. But as someone who had bought into the BBBYQ, if it ends up being, somehow related to Teddy Holdings and resurrecting that ticker from bankruptcy court, which should close this year, I mean, that would just be a delight, But for me personally, not that I think that's exactly where, I don't think that's necessarily the most plausible by any means. Before I get into potential targets, though, I want to kind of try to catch up on the chat here and say what's up. What's up? What's up, Battle Rat from California? Great to see you, man. XEJI says there is nothing more foolish than cat litter in video games. Yeah, totally. Zyka saying, what's up? Hey, great to see you. Ready for the acquisitions. Very exciting. BTF says, I'm ready for Ryan's retail empire. RRE. I like it. DMT says, what about AMC? Speculation on this for years. And then Punky said, it's not going to be AMC. And DMC says, no, I don't think it is. Just notice they're at a 700 million market cap. Super cheap. 700 million is not super cheap, in my opinion, for AMC. I also don't know if Ryan would even consider that a retail industry business. Like it doesn't sell a product, it sells an experience. And the brand is not a super strong brand. Like there's no one that's like, why would I buy my video games from Walmart? I want to buy them from GameStop. Like no one says that about why would I go see a movie at Cinemark? I would never go to Regal. I only watch movies at AMC, right? And ultimately we know movies are doing, there's no turnaround case for the theater. There's some like, maybe it can hang in there case, but there's no like, it's not turning around. There is actually a turnaround case for brick and mortar to say like, man, we might have overcorrected on e-commerce versus brick and mortar, where we place all of the growth, all of the value from the retail industry on whether it's sold online or in a store. And we're assuming that no one will ever go to a store anymore. But as we produce in this world more and more efficiently, as people's capacities therefore grow from a time perspective, what are you going to do with all that extra time? Like some people are still going to go to stores just for pleasure, right? Particularly if it's a brand that you don't have to go to the store to experience it. Like in Bed Bath & Beyond's case, they had the Bye Bye Baby brand and a built out online suite. In Nordstrom's case, I'm sure they had a very robust e-commerce. And AMC, I just don't see it as a strong enough brand. I don't see it as a retail industry name. I also don't see 700 million as incredibly cheap. That's a lot of money, period, especially for an unprofitable business. Nat Turner. Hey, thanks for being here, Nat Turner. He said, I'd love some smaller cap acquisitions. Yeah, we do not want them to sell. Oh, it's 3 syllables. Thanks, Punky. It's prescient. Okay, well, that's how I would have read it if I was just reading it, but I never saw that word before. Prescient. Yeah, silver is tanking. It's very interesting. Yeah, Kyle says, is it sleepy management or is it private equity? Right? I mean, yeah, that's the deal, right? Is Cohen just judging the opportunities he's interested in buying simply from look, this management team's trying or it's not trying, or I think it's very possible he's looking at the incentive structure of management and saying, oh, this management might be saying that they're trying real hard, but I know based on how these people got their seats on the board, based on how these people got their roles in executive offices, that this is a corrupt leadership team. right? This leadership team only exists to capitulate to short sellers' demands, right? Ryan Cohen has seen those dynamics firsthand in GameStop, so I think he can spot those out like a sore thumb. Punky says maybe he buys costs, tiny market cap in the basket. Yeah, I mean, you definitely have to talk to the family. It's like, that's kind of the whole squeeze play with him, is so much of the shares are held by the founding family, I guess. Yeah, remember the old Blockbuster and Toys R Us memes? Totally. Let's look at a couple retailers real quick. Spend maybe 10, 15 more minutes together this morning. Specialty. Maybe let's just start with the XRT holdings. Let's see. Can you show me all of them? Are you not going to? Third quarter hold. Maybe that. Jeez. It's coming, maybe. I saw some people talk about Macy's as far as like they have the value of Macy's is higher, like the value of their real estate is higher than their market cap at this point. So I wonder, like, what is their market cap? Out of 5 billion, that still seems like, I don't know. That would be a big bet. But again, the brand, Macy's is not a powerful brand, in my opinion. So you could get cute, try to maybe, the short interest is like high-ish, 8%. It's not super high short interest. So, like, I don't think you would buy Macy's to try to get cute just to sell the real estate. I don't necessarily know, even though Cohen is, considers himself to now have genuine expertise in brick and mortar retail. I don't know if shopping malls is something he considers to be a desirable piece of that pie. And a lot of Macy's stores, they sell designer brands. They don't sell Macy's brand. I mean, they have Macy's brand stuff, I'm sure, but like, again, what's the high touch? What's the sticky customer? I think that would be hard for Macy's to generate. Oh my gosh. This is like every single thing. What's XRT? Oh my, this is just horrible. You going to show me XRT in here? There it is. Okay. So this is like every trade. That is not that helpful. Oh my gosh. Just show me all the holdings. Well, maybe we won't see this whole holdings list right now. But Camping World, how much does it cost? It's a $1 billion market cap that's not profitable. I'm not familiar with Camping World, but that's more of like potentially up Cohen's alley. Again, I'm not predicting Camping World. But I'm just saying, like, short interest is way higher, right? We're looking at almost 20% of reported short interest. They have been profitable, right? They're right on the cusp, but they're heading in the wrong direction. And they don't cost, like, their total market cap, depending on what they have in assets. Again, I have to look at their actual balance sheet. I'm assuming they own a good amount of real estate. They might not, though. But like their book value might actually be pretty high compared to their market cap. Whereas like the AMC, I'm assuming AMC does not own most of their properties. They might, but AMC's book value might be pretty low. Regardless, Camping World is a specialty retailer, right? There are probably people that would say, why would I go buy my camping stuff at the general store when I could go to the store? Does Camping World own Bass Pro Shops, or are those separate? Does Camping World own Bass Pro? No. Okay. So I don't think Camping World's the name that Cohen would want, because Bass Pro to me is like the premier name, right? I think Cohen cares a lot about brand value. I don't think the conglomerate stores like a Target, some people are asking me about Kohl's. Like, I don't think Kohl's has a valuable brand. A Dollar General, right? I don't think even a whole, like, he couldn't afford Costco anyways, of course, but, or Target for that matter. But I don't think that's really where he's going. I think specialty, like Build-A-Bear, we're talking like specialty. I don't know if he'd be interested in Build-A-Bear. They're probably not a super exciting company. Oh, okay, they're actually trending up, so they still make money. So this chart might be too attractive. Even though their market cap is still very low, like they are trending in the right direction. The short interest is still super high, but I don't know if you would call this a sleepy management team. I don't know if this management team would be interested in selling to Cohen, because they're actually making some moves. But that's an example of a brand that's a sticky name. Some of these others, like a CarMax, I think that's too far away from what Cohen would be interested in, even like a Carvana. I mean, I don't think he would go that big of a leap. I think he would want it to be something he has more expertise in. Some people have asked about Etsy. Like, again, I think Etsy probably already has a pretty premier valuation relative to its sales. I don't know. That chart's pretty nasty looking. So 5 billion though is still a huge market cap, and a 38 PE is not deep value at all. So this is exactly the opposite of what I'm talking about, right? Where Cohen's saying there are diamonds in the rough, specifically in the retail industry. There's a potential that it looks foolish, right? That's like, there has to be a brick and mortar expression for it to feel like exactly what I think Cohen's describing. I don't think he would get into the food space either. There, if you sort it, okay, these are like too tiny. Let's get to like, okay, now we're in like $100+ million market cap, consumer services and retail. Maybe we'll look at a couple of these. Some people are saying check out Go. Buc-ee's, there's no way. I mean, Buc-ee's, like, they're privately held, right? They're not public, and he's making a ton. I don't know Mr. Buc-ee, but I know people that know him, and he is, I mean, I don't know. I don't think he would even have. I don't know why he would sell. like, like they make a whole lot of money. Let's check out Go real quick. Go. Any other suggestions people want? So okay, so this is food. I don't think he wants to go food, but maybe he does. They sure as heck don't make money. They're less than $1 billion. They're super highly shorted. So all those to me make it plausible, but like what's the brand? You know? Like why would people shop there versus a different grocery store? What brands does Grocery Outlet own? Simple Go brand. Like it's literally they just call themselves Grocery Outlet. I think that's a horrible name too, by the way. Like you go to the outlet store, you get the stuff that didn't sell in the good store. Grocery Outlet makes you think that the groceries are about to be expired, right? It makes you think that people want it, like whatever. Here's all the produce that no one bought at Costco. It has 1 day left of shelf life. You can pick it up at Grocery Outlet, Cost. People want me to check out costs. Okay, yeah, someone mentioned that earlier. So, I mean, the chart's fine. Nothing going on. Tiny market cap. Hardly any employees. They don't make any money. Incredibly highly short. Holy smokes, man. That's just crazy. So it really comes down to, does he find value in what they do? There is definitely like some overlap, like within GameStop's industry, right? The things that GameStop sells, what do they even look like? Okay, so it's definitely a bunch of like no-name brand. Like I don't think the brand value is very high at all. All these headphones look like pretty yucky. So I wouldn't covet this business. And GameStop already sells, like they sell this stuff in their stores. So does GameStop, do they get better margins over the long term in their stores if they own costs? Like, does Cost have a better supply chain for manufacturing these like headphones and equipment? It says they engage in the manufacturing of them. So if I was GameStop, I would only buy this if it created enough synergy to increase your margins on hardware, right? Which accessories are included within hardware. If they can squeeze just a little bit more margin out of the hardware business because they own some IP as it relates to design and manufacturing of some of those accessories, then they can rebrand it with the GameStop brand rather than keeping the Cost brand. Then I think that would make sense. I don't think it describes what Cohen's talking about in this article. That would be very incremental. It wouldn't be big, but it would fit what we're talking about from a very low cash value and very high technical upside because you're forcing shorts to close or to roll over, right? So, like I think Costs could definitely be an acquisition target, and I know that's been speculated for many years. Bobby Joe says Grocery Outlet. He says they are about to expire. They're marked down 90%. So it incentivizes people to shop there first before other grocery stores. Yeah, I mean, the numbers say that Grocery Outlet does not make a lot of money. So I don't know how many people are incentivized to shop there, But fundamentally, do people want to go to the grocery store every day? Like, you want to buy the food today that you're going to cook today? No, most people would rather go once a week or once a month or never, right? And give me some in the freezer too, just so I have some food ready to cook. Like, I just don't think, like, I don't think grocery outlet is likely. Patrick says GameStop brand is also not a high value. I disagree. GameStop, the company, has been ridiculed for years, but as a brand, they are the premier video game retail brand in America. You know, so like that, like everyone knows the company. Like literally, I've never heard of Grocery Outlet until this thing. You know, I've never seen anyone wearing Koss headphones in my life. You know, like I've seen Bose headphones, right? Like I've seen plenty of private label. I've seen Skull Candy. I've seen Amazon. You know, so like GameStop is a valuable brand, if for nothing else than its reach as far as how many people subscribe to them, like the Power Up Rewards base and all of that. Some people are talking about Kohl's. I think Kohl's is similarly, like, I don't think it competes from a brand perspective. I think Kohl's is, and it's still kind of expensive, you know? It's still a 10 PE, it's still $2 billion. It does have high short interest, but I'm not familiar with their business. I know they are similar in terms of they have whatever, the real estate value is higher than their market cap. But if the real estate value is higher than their market cap, the other way to say that is their enterprise value is negative. It's just like GameStop was back in 2018, 2019. No one believes in Kohl's. The only reason they have value is because they own the real estate. But Target, Walmart, I mean, people don't even believe in Target. And Kohl's is definitely going under before Target does. You know, like similar to Macy's. Again, they're not selling their own branded stuff. They're just trying to get brands to sell in their stores, which puts them at a disadvantage. Columbia Sportswear. Okay, that's interesting. So we know that he's potentially interested in clothing because he bought Nordstrom, right? This chart looks bad. That's a good sign. It's still a $3 billion, 16 PE, so it's not like super undervalued. Short interest is modest, not crazy low. So I'd say like there's definitely a chance. I would have to dive deeper into them. Do they have their own stores? Does Columbia Sportswear have their own stores? Surely they have some, right? Okay, they have 170 stores. So that's not bad at all. It's not too many. They like Cohen might even want a few more than that, but most people probably buy them in other stores, which is fine. I'd have to look into the leadership team to see if they're incentivized well for growth. It seems like they're not incentivized based on the track record of the stock. But this decline from 2018 to present could be a decline in brand value. Like it might be like Columbia is not quite as sticky as it used to be. You know, like that might just be what the matter of it is. Michael says, I hope he doesn't increase retail footprint. Yeah, I mean, that's the part that's why it would look foolish. Which is why I thought that quote surely wasn't him. You know, but I think he is interested in increasing the retail footprint modestly, not like extremely. But I don't think Cohen thinks stores are screwed. I think Cohen thinks he knows how to make some pretty freaking good money in stores. And by the way, he bought it for free. Like when he bought GameStop, it did have a negative market cap, a negative enterprise value, net value. So in that sense, Kohl's is, hey, maybe so. You can have the business for free, the enterprise value for free because of what we have on the books. The problem with Kohl's is there's just not a lot of business turnaround case in my mind. But I'm excited. I kind of have to go. I have a meeting coming up here, but I am excited to continue this. Maybe, hopefully he doesn't buy Playboy. Jeez. Fossil, again, that's a mall one. Ooh, Lovesac. What about Lovesac? Horrible chart. Only 200 million. Oh, the PE is still super high. Okay. So people still think, and short interest is even kind of coming down. People still think this company has enough growth ahead of it. And they do make money. So probably not Lovesac. That's okay. I thought that's a brand with some stores that's sticky. It's easier to delight high-end customers in general than it is low-end customers. Funko's one that's been talked about forever. Again, this one's similar to Koss. I think he would only want to buy this if incrementally it helped GameStop's margins. I don't think he would buy this as like we're trying to become a holding company. Like, I just don't think there's that type of value. But Funko does make sense if they're bullish on Funko and they still sell tons of them in their stores. So it's definitely still a possibility. But I'm kind of thinking more that he might be interested in some purchases that get him exposure into more types of retail businesses, right? Like a Nordstrom did or a Bed Bath & Beyond did. How is Nordstrom looking these days, by the way? Are they done? It's not bankrupt. Oh, they went private. Wow. They went private. Okay, I really got to go. Maybe we'll do another video soon, continuing to dive into some options together. Y'all can come with some of your thoughts. Oh, look, it's still public. It's still listed here. Why? Why are you showing me this ticker? Oh, because this is overstock now. Okay, yeah. So, that's a possibility. It's certainly a possibility. Low market cap. And it doesn't make money. It's fairly highly shorted. But they don't own Bye Bye Baby. So I don't think Cohen's interested in buying Overstock because he publicly was only interested in Bed Bath & Beyond of old because he was going to sell off the Bed Bath & Beyond part and just keep the Bye Bye Baby part. So I don't think he's necessarily interested in Overstock, which is now Bye Bye Baby. Krispy Kreme for $500. Shoot, I said he didn't want to get into food, but I don't know. That's a pretty bad looking chart. Doesn't make money. Only 500 million bucks. I don't know what they have on the books, right? I don't know their book value, but highly shorted. The product itself is very cheap to make, but it might not be good enough. It might not taste good enough. But anyways, Krispy Kreme, I think there's a chance. Right. Yeah. Dream on Me bought the IP So there's some speculation that the assets of Bye Bye Baby are still available. But yeah, companies related to kids, it's a great thought process, right? Like, what are the types of customers that could be delighted? The types of customers that are unique enough to create a special retail experience that they value. How much is Pottery Barn? Are they owned by Williams Sonoma now? I don't think he wants to go here. And yeah, that chart is crazy. There's no way he's doing that. Dave and Buster's? Oh, wouldn't that be cool? That would be more of an experience than a product. Oh my gosh, they're bleeding money. Are you serious? Okay, not that bad. Not that bad. Super high short interest. I mean, GameStop also having a live entertainment venue, right? Coppell, isn't that in Dallas? That's in Dallas. They're headquartered in the same city. Shoot. Their ticker is literally play. I mean, how much meme glory is there in that? Their ticker is play. Power to the players, right? Come on. There's so much that GameStop could do to create a high-touch customer experience with Dave and Buster's. WJP says a very well-run bar makes 10 to 15% max. That being said, if they open one, I will be offering my services to the company. Yeah, I mean, they could make it like it's all comes down to, can Ryan Cohen make it better? Because none of these businesses make money, right? But their brand, like Dave and Buster's, is a real brand, and the experience is a real experience that could be some synergy. Krispy Kreme, it's a real brand, right? There's like, if you can figure out the margins, you have everyone already knows you exist, right? Everyone knows about you. You don't have to market that you're out there. You just got to start doing what you do better. So I think, it's another interesting one from my perspective. Yes, an acquisition could really be quick after insider buying. It's me, BK. All Cohen has to do is initiate the conversation, and he said he's fixing to. He's got a couple names on his list. I think at least one of these names we've talked about is on Cohen's list. I honestly do. I appreciate it. All right, I gotta go. I got a meeting to catch. That's all I got for you today. I will see you in the next one.